Well, good evening, everyone, and welcome to another one of our evening webinars here at Level Financial Advisors. I'm Mike Hebron, the Chief Operating Officer and one of the partners here at the firm. And tonight's topic will be long-term care insurance and things that you would need to know if you're pursuing that option and looking at long-term care. Before we get to our tonight's expert on this topic, I just want to share a couple of ground rules for tonight's webinar. First of all, the webinar is being recorded. So if you need a copy of it afterwards, 24 to 48 hours after we finish tonight, we will send it out to you via email. So you can have that to peruse at your leisure. Second, just want to mention if you have any questions during the webinar, you can use the chat or the Q&A function on the webinar to ask your question. If you would like more in-depth or personalized Q&A, we will open up our text line like we normally do for these webinars. If you text the word LTC, long-term care, LTC, to our text line, 716-727-5047, we will make sure that Margaret, our expert, reaches out to you after the webinar to answer your individual questions. We'll have that information for you. We'll throw it in the chat as well. So with that said, I'd like to introduce tonight's expert. So we have Margaret Tomaka from Specific Solutions. Margaret is a senior brokerage manager for Specific Solutions in Williamsville, where she has worked impressively for the past, Margaret, 40 years, 1985. During the course of her career, she's worked in obviously various areas of the company and was promoted to executive vice president in 2015. She specializes in long-term care and disability contracts. And when Margaret is not working, she enjoys spending time with her family, including her dogs, and she enjoys reading and walking. So without further ado, Margaret, I'm going to turn it over to you. And like I said, everyone, if you have questions, you want to enter them into the chat, I'll try to interrupt Margaret at the appropriate time and try to get your questions answered. So over to you, Margaret.
Okay, so we're here to talk about long-term care and what you need to know. One of the first things that you need to know is, what is long-term care? What is the definition? And the definition is, it's care that you need help with your activities of daily living. Now, the activities of daily living are eating, bathing, dressing, transferring, continence, and toileting. And transferring is when you are being transferred from the bed to the chair and back again. And they usually use lifts for that in some places. So that is, or a cognitive impairment, and you need to have the care for 90 days or more. And that makes it considered long-term care. So where do you get the care? Well, you can get the care in home care, for one. Home care can be done informally or professionally. Now, informally means that your family members, your spouse, your children, or a friend is taking care of you. And that's okay for a while, but the toll that it takes on your family is really, really hard. And professional home care is the better way to go. But you might start with the informal and then go to the professional down the road. And sometimes your loved ones don't know when to start the professional. So you have to beware. So the next place is, after home care, is assisted living. Now, assisted living comes in two types of assisted living. One is the regular, where you have a residential place to live. It's either a room with a sitting room and a bathroom, or it can be an apartment with a single room. This is a care that you would get, and it depends on what services you need. So in assisted living, you have many services. There's managed medication, there's meals, there's laundry. There's a lot of socialization for this as well. Now, I would consider socialization one of the most important things when you're dealing with long-term care. If you're at home for any length of time and you're alone, you just start to slide, and it really isn't good for you. And a lot of people fight to go to an assisted living. And once they get there, they realize that it's really good. I mean, my own mother, we had her at home for a long time, and then she went to a care facility. And after a while, I could never find her because she was eating lunch, she was having coffee, she was out everywhere. So it's very, very important to get socialization. So the other form of assisted living is enhanced assisted living, because your normal assisted living isn't going to help you transfer. If you can't transfer from the bed to the chair by yourself, then they won't take you. So in some cases, there are some that have an enhanced assisted living, and that is where they do transfer you, and you would still be able to do and get all the other services that they have to offer. So the last part of where you get the care is a nursing home. So, and it's important to think about nursing homes, because it used to be in the 1990s that the only place that you could go was a nursing home. And so you went there and you spent years there. So maybe 10 years or more. And that's not what they do now. So what they do now is you have home care, you have assisted living, and when you're very, very ill, you go to the nursing home. So the statistics are telling us now that you're not going to last 6 months. And there's always exceptions to this. If you have Alzheimer's, dementia, you could last a long time in their facility. But for a normal person going to a nursing home, it really, you're not going to last that long. So when you're planning on this, you're looking at the costs for home care and assisted living first, and then nursing home last. So, okay, now we have where you're going to go and what it means. How are you going to pay? How much does it cost for this type of facility? So we have a chart for the cost of care, and I'm sure that most of you can't read it because I have a hard time myself, but we put it out. It's $34.11 a month, or I'm sorry, per hour for an aide. And now an aide comes in and takes care of you if you need bathing, dressing, things like that don't need a professional. So $34.11 an hour for an aide. So, and it's not bad if you just need help getting out of bed, getting dressed, taking a shower, something like that. But if it's more than that, an LPN will cost $141.53 an hour. And these are the 2025 numbers that we do have. One of our companies does this cost of care every year, and this is what it is for this year. So an LPN does a little bit more than an aide, and their services show that. So, and lastly, an RN would cost $163.96. So a nurse and RN is coming in when you really need a lot of care. And if it's going to be like every day, all day, then that's the point where you probably should go to an assisted living. So an assisted living in a single apartment, 1 bedroom, will cost you $5,993 a month. A nursing home, semi-private, would be $11,364, and a private room would be $12,218. So you're looking at this is a lot of money, and you don't know how long you're going to need care or why you're going to need it or anything else. So it's very, very difficult. So I always tell people, if they have a cognitive impairment history in their family of Alzheimer's, dementia, then they really need to beef up their whatever their coverage is going to be. They really need to make sure that they have enough coverage for that, because people with those types of diseases can live for a long time, and they may graduate to be really helpless. So it's really something that you need to look at all the options that are available, because you really need to plan for this.
And
I
Margaret,
told,
we have a brochure we can send out as well with the video for the
yes,
participants, which will have something you can read a little bit more clearly than this chart for every single state. And these are obviously averages,
right.
I'm assuming, but we will send that out to all the participants so you can look at your individual states if you don't happen to be in New York, and check those out. So I just want to add that.
Right. And where was I? Okay, so make a plan. So when I meet with people, one of the first things I'll ask them is, do you have any children? And do you have daughters or sons? And where are they? And if the daughters have moved away, then the chances are you're going to move away where your daughter is. And this is not just me saying, this is what statistics are showing us. Your daughters take care of you most of the time. And sometimes your son does too, but that's another way to plan. So try to do every single instance that you can think of that will happen and plan for it. And then put it in a drawer and put it away. Make sure your family knows and then put it away. But trying to plan for long-term care can be difficult and expensive. So we have to look at who pays for it. So we know what the cost is going to be, but who is going to pay for it? So a lot of people say, oh, Medicare will pay. I know they'll do it. Well, Medicare only pays if you go from the hospital, you spend 3 days in a hospital and you move directly in a nursing home. And they will only really pay for nursing home. They really don't pay for home care or assisted living. So day 1 to 20, they'll pay in full. Day 21 to 100, the copay is $204 a day. Now, this is in your Medicare book that the state sends you, so you can look it up and see what other things could happen. But that's basically what it is. Or you can go on to Medicaid, but the Medicaid you have to spend down. So you have to spend down to $1,800 a month for singles, $2,443 for married, and the assets of $32,396 for a single and $43,781 for married. That's a lot of spending down. But until you do, they're not going to take you. So what they'll do is they'll add up all your assets and everything that would be countable. And then they would do a formula and then tell you, okay, you have to pay for 5 years of nursing home, and then we'll come in and pay. So that's a little bit difficult. So, and you really don't want to go onto Medicaid if you don't have to.
Margaret,
So,
we have a question just regarding the spending down. Can you
Mhm.
elaborate a little bit more on what you mean by spending down to 1,800? If you're, let's say, a widowed uh, spouse who's approaching the need for a nursing home, what do you mean by spending down to 1,800? What is the 1,800 number?
So 1,800 is what you can make coming in. That's the income that you can get. And to get down to that, you have to either turn off your income or sign it over to the nursing home. So,
Okay.
yeah,
So, for example, if you were receiving Social Security
yes,
and it was in excess of the 1,800, the balance would have to go to Medicaid or to the nursing home.
right.
In excess would have to go.
Right.
Okay.
Now, one of the first things that happened after my mother went through everything and she had to go into a nursing home is the very first thing that they asked me to do is to sign over my mother's Social Security to them. So they'll take the Social Security first and then look at everything else. So that's Medicare and Medicaid, and those were the ones that everyone thought would save them, but it doesn't. So what the next one can be is insurance. So if you buy insurance for long-term care, it's expensive. It's not as expensive as paying for the nursing home or the home care or the assisted living, but it is expensive. To buy a traditional long-term care, we'll go over that a little later. Another way is out of your savings. So you've saved all your life and it can all be wiped out in 1 year for a nursing home. So, and then what will your spouse do? So there's a lot of things to think about when it comes to this. So I'm going to spend a little bit more time on the insurances because there's several different options that you can get. So on the traditional long-term care, and what I mean by traditional, it only pays for the long-term care. It pays for home care, it pays for nursing home, and it pays for assisted living. So you can get all different types, but I have to warn you, these are all underwritten. You must be healthy to get these. And there are companies out there that will look at your family history. If you've had Alzheimer or dementia in your family, they may not cover you if there's more than one. Like if your mother and father both had it, they may not cover you. So you can get a policy for 24, 36, or 48 months. The maximum amount now that they're willing to cover you for is $15,000. And you notice that when we did that, for the nursing home private room was $12,218. So, and some nursing homes are more. What those numbers are just an average in this area. So the waiting period, it can be 0 to 365 days. So what happens when you have a waiting period is you get covered for it, but you have to wait. And the more that you wait, the less the cost. So the standard waiting period would be 90 days. Cost of living. So we can add like a 3% or a 5% compound onto the contract that you had. And so you're 15,000. And if you can't afford to do the 15,000, maybe a 6,000. And I use a $6,000 number because that is about where you are finding assisted living right now. So then 3% compound or 5% compound on top of that would be a good start. There are other policies that will give you maybe 1% to 5%, and they'll do something that you can turn it off, turn it on. So there's all types of options on this. But there's some riders that are very important. And this comes with waiver of premium. If you become on claim for long-term care, your premiums are waived. You don't have to pay them anymore. So more riders than that can be a shared care. If you and your husband, you and your wife would like a policy and you want a shared care rider, the shared care means that some of your benefit, maybe you both have a 4-year benefit, some of your benefit can be shared. So you both have 4 years each. So if the wife needs nursing care, goes into a nursing home, uses all her 4 years, she may be able to take 2 years from her husband's policy. There's not many companies left in New York that have traditional. I know I wrote down New York Life and Mass Mutual. Mutual of Omaha is one as well, and they do a very good job. And the reason I say that is because they're one of the few companies that have little to no increases in the premium going on. And a lot of the companies have pulled out of the market because it was never priced correctly back in the day. They just lowered the price so much that it's not sustainable for all of the different claims that they were getting. And I know if you probably talked to some of your friends, they're probably saying, oh, I had Genworth and my premium's going up again, or I had Mass Mutual, or I'm sorry, MetLife or Bright House or John Hancock. And yes, they have been going up quite a bit. Now, the trigger for you to get paid on a long-term care policy is that you are unable to do 2 out of 6 activities of daily living or a cognitive impairment. Now, the activities of daily living were what we said in the beginning, the eating, the bathing, the dressing, the transferring, the continence, and the toileting. And people always ask me this, and I know nobody wants to talk about toileting and continence, but there is a difference. Toileting means you can get into the bathroom and sit down yourself. And continence mean being able to go. So that's the long-term care policies. And in my mind, I think that these are the best way to do it.
There's
But
a couple of questions, just a
sure,
couple of questions. First, in your experience, when do people typically purchase long-term care insurance? I mean, obviously, I'm sure you don't see a lot of 20-year-olds purchasing it. Like, when do people purchase
20
long-term
years,
care products?
20-year-olds can't get it anyway.
Right.
So
Okay. Perfect.
not that they would want it. So um, we see most people are coming younger now than they used to. It used to be that they started looking at it in their 60s, and that's too late. So I would say in your 50s that they should look at it. Absolutely.
And the second question is, these policies typically, do they have fixed premiums, or do the premiums increase as your age gets closer to what would be, typical nursing home age?
Right, no, they're fixed premiums, but as I said, some of the companies came back and increased premiums, but they increased it as a whole block of business that they sold. Now, today, I can tell you that Mutual of Omaha, one of our companies, has said that there is a less than 10% chance that they will increase any premiums from now into the future on a block of business buying it now. So, yeah, I know what you mean. Probably, some of the older products might have had a sliding scale, but no, these are fixed premiums.
So, and I don't know if you can answer this or not, but I'll just throw this in as a question. So if a typical, let's say a 50-year-old person is purchasing a standard type of long-term care insurance product, what are they looking at premium wise, in your opinion, just in general, like, just to give people a sense?
Ugh, my math is terrible. A 55-year-old, I would say, would probably see, and another thing about long-term care premiums, women cost more than men. So it depends on if it's a man or a woman. So I can say maybe $3,000 a year for the man, for a $6,000 a month with inflation, with waiver of home care, and the woman would be 5,000. Because if you go into a nursing home and you walk through the door and you watch all the people, you're going to see mostly women.
Okay. And then another question just came in, and we can just use this as a hypothetical. I think you kind of mentioned before, but this question says, if I'm 69 and my husband is 65, I imagine the premiums would be really high, and this is a bit late to start. And I think you mentioned it's late to start, but if somebody wanted to, could they actually get long-term insurance at 69
Yes.
and 65? And I mean, as a multiple, what are the premiums going to do there? Is it going to be really, really expensive, or?
Well, they're going to be a lot higher, of course, than the 55-year-olds. Maybe 7, and females are going to be 8. I mean, it's not as big a spread as they get older as it is when they're younger. So I would say probably 7, 8,000 for the 60, 65.
And that's a annual premium.
Yes, and
Okay.
that's just a guess.
Yeah.
Yeah.
We will not quote you on this. And if anybody's really interested in getting a specific number, we're going to have Margaret's information up here at the end as well, or you can text us to that text line, and we can get you in touch with Margaret. But yeah, it's expensive. So those are the questions I have right now. So
Okay. And when we're looking at the long-term care, there's 3 levels. So if you're very, very healthy, you can get preferred. And if you're medium healthy, you'll get select, and they'll even go a rated class. So rated class 1 would be for people who aren't quite so healthy, but would still be able to get it. So it all depends. So Well, the reason I like the long-term care is because, like I said before, it's geared toward long-term care and it doesn't have anything else in it. But there are several other products that you might consider, because if you do long-term care traditional and you don't use it, well, it's gone because it's insurance. Use it, you know. So we have some products that come with life insurance. The first product, I like to call them the bucket products, because you have a bucket of long-term care, you have a bucket of life insurance. So you buy it for the long-term care. This product is buying it for the long-term care, and you accelerate the death benefit in the first 2 years. And it can be a 6-year benefit. You accelerate the death benefit in the first 2 years. So after that, there's no death benefit, but a little residual that might be like about 10,000 a year, or 10,000 for a benefit. So I like this product for people who say, well, what if I never use it? Because some of it does have something, a little, but it's still something for a beneficiary. This kind of a product you can design. You can do a 6-year benefit, a 3-year, 4-year, whatever, with inflation, with some of them have cost of living and some of them don't. And you can decide that you may want it, you may not want it, but it's a niche product, but that's the bucket product. And then we have life insurance with an LTC rider. So there are many, many companies that will do this. They do it on a life insurance chassis, that you have the life insurance and then you buy this rider and you can accelerate the life insurance when you want long-term care. But once you've used all the long-term care, usually the life insurance is gone. There's not anything left. So there's many, many companies that do that. There's many other things that you can do. You can talk to an elder care attorney and see what they have to offer. A reverse mortgage. A lot of people use the reverse mortgage because they can stay in their home if they want to, and then they can use the money for the care in their home. If they ever have to go to an assisted living, they sell the rest of the house, use the money to pay for the assisted living. And that's only if you're single, because if you're married, what are you going to do with your spouse? Again, home sales can be done. And there's more plans. I want to talk a little bit more about the life insurance plans, because there's a lot of different ones out there, and they're all good, and it all depends on what you need. Do you need life insurance? So maybe you buy this with that in mind, with the rider. You can get higher amounts, you can get lower amounts. You can get pretty much anything that you want. So I always tell people, one of the big things about long-term care is make a plan, whatever it is. We're not looking to sell you anything here just to try to find people that want to buy something. We're just looking for you to take care of yourself and make a plan. Talk to your kids, talk to your attorney, talk to whoever, and see what you can do to make the plan. So it's really important that you take care of yourself. And if you want, I always hear this from people, we want to save our money for our kids. We want to give all our money to our kids. Well, most of the kids that I've been with, the clients, the kids are in much better shape than the clients are. And the kids are fine. They're telling the parents, buy something for yourself. So another option for paying for something is go to your kids. Do your kids want to take care of you, or do they want someone else to help take care of you? So in a lot of cases, when the kids are very successful, they will be happy to put money toward a long-term care policy for their parents. So, and unfortunately, that's pretty much all that I have at this point, and I'm hoping you have a lot more questions.
Yeah, so I want to pass along one more time just to have this on here. This is Margaret's contact information, her email address. It looks like we're missing a number on the phone number. It's 716-632-7777.
7.
So we're missing a 7. 4 sevens. 716-632-7777. You can also text the word, the acronym, I guess I'll call it, LTC, to our text line. You'll get an automatic response there, and then we can have Margaret reach out to you and answer your specific questions about long-term care. And then I guess the last thing I'll add is that you should also be talking, if you're a client of our firm, you should be talking to your financial advisor about your plan, and making sure that they're building it into their financial plan, your financial plan, so you can have an understanding of how you might be able to fund long-term care in the future, or whether you should buy a policy or not. So if you have questions about that, please feel free to talk with your financial advisor, or call us here, send us an email, and we'll certainly have that conversation with you. So with that said, there are no other questions in the queue. So we will sign off for tonight in this short webinar. Thank everybody for attending, and have a great evening.